Hello folks, L.A. Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey folks, L.A. here. I want to flesh out some of those software stocks. Yesterday I talked about in the weekly review, talked about the idea that we're going to probably see movement from hardware to software for trade. I'm not talking about long-term stuff here. I'm talking about trades that give you, high probabilities with low risk. And I just want to flesh out a few of those and show you what I'm thinking. To give you an idea of what I'm talking about first, though, I gave an example yesterday of Intel and said, here's a hardware stock. And in this case, we're talking about semiconductors mostly. Goes up, hits a new high, right? You can see the volume expansion as this thing goes up. Never can set a swing point high on the way up. That tells you how strong it was. Finally retraces, and as it comes back up, it looks like it's getting a failed bounce, which is setting up potentially this bearish ABCD structure to the downside. And I think you're going to see that with a bunch of these hardware stocks over the next couple weeks, maybe 3 weeks. That money, when it comes out of the hardware stocks, right, the chip stocks, the memory stocks, all of those stocks, that money's got to move somewhere. Is it going to stay in the market? And my answer is yes. And then the question is where to? Well, I suggested yesterday that probably software. And the reason I said that, and I brought this up, a good month ago. It looks like I did this on 5/5 and said, hey, IGV looks pretty interesting here, right? It's coming out of this base. Looks like it's a pretty good trade. I did some options on it, made some decent returns. If I look at the expanded software sector, this is the main holdings in it. And if you move on down the list here, here's an example of IGV and what was happening to it. And, as of this past week, you saw the huge spike on Friday. This thing had already broken out, right, on a swing point high, broke out here, got really interesting in here. This is when I did the options bull spread and got to push up, right? And this final bar here, this is on a daily, which was Friday, which is May 28th. Got a big spike up on volume because a lot of those big cap stocks that were in this sector, right, a lot of these took off. Now, some of those are too far gone at this point. Some of them don't make sense to try and chase, but I want to give you an idea of some of those that are still out there, and I'll just start down the list here and do a few of them for you. You can always come over to the site, register on the site, right? You get access to all the tools, and you get access to these charts as part of that. So if you will, take a look at these. ACN, Accenture, and I'm going to just show you what I'm looking at. So you kind of got, going to classical stuff, you kind of got a cup and handle thing here, right? Well, neoclassically, you just broke a swing point high. And you have two of them that you just broke, right? So you went from bearish to bullish in one fatal swoop on the daily on this stock. Now, if you look at it, longer term, this thing's been in a huge downtrend. Maybe this was a flush out, on the bottom. You're going to have resistance here on this swing point high. You got another one up here. Take the top of that, take the top of this. I would think it trades into that area at least. That's another 20 points up. That's another 10, 12% at least, right? If it gets up to the retest regens up here, it's even more. But you can see this stock has been blown out. It just got a reversal over here on the monthly. If you look over here, just turned bullish, like I said. It's not extended on these time frames, so it could go lower over time. But if you look at it here, right, your bearish trend is past due. 141 was the target. It didn't get there. It's still active, and it will be until that ABCD reverses and you take out the A point. But if you take out the B point, which is just slightly overhead here, that's going to reduce the odds of this actually completing. What's happening? You got bullish ones. You got one that's already activated. You got another one coming on, and you'll probably have some more show up as well. So I like the way this is set up. I think there's a good trade. you know, if you think out a bit about it from a risk reward perspective, you got these two swing point highs, you just put your stop underneath, right? So you're risking from, you know, the current price point 188 back down to, well, let's see, about 177, and give it some room, because you've got long term's about 8 points here in terms of the ATR on an intermediate, 6 points on the short. So you got to give it about 2 points of that. So give it a couple extra points. That means you got to put your stop around 174. So you're risking about 14. You're shooting for at least 20. You know, maybe you're shooting for this higher spot up here over a little bit more time. And, you know, I'm looking at the numbers here. Yeah, about 230, 240. So you can see the risk reward. I mean, we're not talking about huge numbers, but we're talking about pretty high probability trades, right, without a lot of risk. And matter of fact, the fact that this just broke out says it probably will come back in and retest. It may or may not, but I'm saying what you do is you take a piece, comes back in, you take more, you get your average in here somewhere, right? And you're shooting for this, you know, 240 up here, 230. So you can see how that trades, how that plays out. So that's an example. Let's just flop through a few more so that you have a few on your radar. Let's look at Adobe next. Here's Adobe. You can see here, now you had a big gap down on this one back here, right? It's trying to fill it, higher highs, higher lows. Well, you got this higher low. This one was a little bit lower than that one, but you can see the volume coming in on Friday, right? You can see over here on the weekly, where's your target? At least this swing point high, this bar here. So you're shooting for, let's get the numbers, 285, 299. So you're shooting for about anywhere from 285 to 300. Where you at? 260. What do you got to risk? Well, in this particular case, you just broke out, and your risk is back below these, 252, and you're trading at 259. And then again, you got to look at your ATR. That's about 8, so you give it about 2 or so. So add that back, about 250 on the bottom, 249 if you want to be safer. Good risk reward. You see what I'm seeing, okay? I'm not going to go through all these, but I'll just show you a few more. Take a look at Box, for example. Box looks pretty interesting as well. If you look at Box, you can see here it's breaking, or just broke back above a swing point high on a weekly. You can see the continuation that's already started to take place over here on the daily, right? This thing's pushing up higher swing point lows all the way, higher swing point highs. You know, that's an uptrend, and you can see the uptrend showing right here. If you look at it here, you just turned sideways, right? And if you can get up, you know, where can you go to? I would look at this bar as a stopping point somewhere in here, about 31. That's in the thick of all these bearish retest regions. If I look over to here on the weekly, right about the same spot. So about 30, 31. You're trading at 27. That's $3 to the upside. What do you got to risk? Well, you have to figure that out. But you know, you'd have to get a retrace probably to make this one work. But again, you can go through these and you can see what I'm talking about. Give you just a couple more examples. Here's DocuSign, right? Look at the break here. Look at the breaks there. This thing has been beaten back down again. Just changed trends. If you look at the ABCD structures, all your bullish ones, well, actually you still have two bullish, or you do have two bullish ones that have just confirmed on the upside, 54, 55. You know, we're trading almost there. You'll probably get some sort of a pullback after that. That would be the buy on the pullback. And just give you a couple more. Microsoft is one of them I talked about. That was the one I said actually on Friday morning before the market opened. Things jacked up about 5.5%. And you can see what I was looking at, right? You were here with the potential break of two swing point highs. You had this ledge that had formed, right? You kind of on a classical, you got the cup and handle thing. And your targets are up in this area, right? Probably about anywhere from 490 or so back to about 470. That's probably the target. This one's probably a little bit too far gone. unless you get a little retrace back, then it might make sense again. But you can see what I'm doing here. Here's one that I've never really liked that much, but Meta even looks like it wants to try and turn and make a run. I'm not as enamored here, but you can see your risk reward is very low, right? I mean, you don't have to take hardly any risk on this thing. You put your stop up underneath here. Let's say you get it in this area. You're risking about 12 points. And what are you shooting for? You're shooting for that swing point high in this bar here. So you're shooting for anywhere from about 680 to 700. And so you can look at the numbers. You know, they work pretty good. I'll give you one last one. Palantir. Palantir had been sold off pretty hard, for Palantir. If you look at this, I mean, this was a huge run, and now you kind of get this rolling bottom that's coming in, right? So you got swing point low, lower low, lower low. If this sticks, you're going to end up with 1, 2, 3, 4, 5, 6. You're going to end up with a higher low, and if you get over this high, you're going to end up with a higher high on your weekly. Over here, it's already telling you that's what it's probably going to do. You just broke over all the major resistance, right? This crashed down, comes up, right? Does its thing, and now it's making its move. Got over it. I don't know if this one's going to look back too much, but if you get any kind of weakness, it's a buy. And again, I would use an average in strategy. I'd find a place to add, and just do my numbers and say, okay, where can it come back to? And that come back to is about right there. So, you're risking about 13 right now to the downside. What are you shooting for? New highs. I like these stocks. I like this setup. I like the idea of what I see, and that is you're probably going to see money come out of those chips. It's going to come over. It's got to go somewhere. It'll go other places too, but this place looks pretty primed given how far beaten down it was and given the fact that it is what? Technology, right? That's where everything is. So have a great one. Take care. If you like my videos, give me a like. Share it with a friend or two, right? Let other people know. I'd really appreciate it. Thank you so much. Take care. Bye.